Well, good afternoon, everyone. My name is Dennis Craig, and I'm an associate at Cooley, LLP. I am in our emerging companies practice, and I also do a bit of fund formation as well. And just to get the legalese out of the way, since I am a lawyer, Cooley is a global law firm. Particularly on the fund side, we've closed over 60 billion in funds just last year, and our emerging companies practice is ranked first in the world. So now that we have that out the way, I'd like to introduce Himalaya Rao, who is the founding managing director of the Black Founders Matter Fund, BMF Fund, and Luke Cooper, who is the founding managing partner of Latimer Ventures. So just to get started, I thought just to sort of set the stage, since this is the what is it like to start a fund, I wanted to just get some of your background, and if you guys could just tell the crowd sort of how you came to be a venture capitalist.
All right. Hi, everyone. My name is Himalaya. As mentioned, I run the BFM Fund. I actually started in a pretty non-traditional capacity. I was a school social worker in the Bronx, and so my background was very much in humanities and advocacy. I actually ended up leaving the school social worker, like traditional working in public schools, because I wanted to make more proactive change and be able to impact a broader number of people. I actually got into consulting and then got my MBA. I then launched a company with my wife, and that's actually what led me to learn about venture capital. And for me, it felt like there's so many people who don't know about being an entrepreneur as a career. You know, like there's so many Black and brown folks who are doing small business ownership, who are incredible at the hustle, but then don't get the benefits and recognition of being founders and participating in the innovation ecosystem. And so for me, that was why I wanted to be in this space. And I tactically, how I did it was I ended up working at several different funds. So I worked at 7 other funds. Then I launched 2 economic development funds to learn how to get a fund going from the ground up, and then put both of those pieces together to then start the fund.
Awesome. Luke?
Yeah, awesome. Great to be with you guys. The question, starting a fund, the shit is hard, really, really hard. But it's not the hardest thing I ever did in life, right? Hardest thing I ever did in life was overcoming poverty at the age of 12 with a father in prison. So I've encountered harder things than this. The challenges are multifaceted, and they're on both sides of the equation, both in terms of LPs, what they expect of you, how they expect you to sort of come to the table, and also, certain parts of the ecosystem, which we'll get into later. My background, I came from a non-conventional sort of path to venture. I started as a, M&A attorney at DLA Piper. By the time I was 24, did about $250 million of transactions, learned M&A, how to, create accretive value through company acquisitions. Over that period of time. I was also in-house counsel at State Farm, so learned the corp dev roles and what roles they play in CVCs and all that stuff. And then I got really excited about doing my own thing, and I built and sold 2 technology companies. One of the first Black entrepreneurs to do that in the state of Maryland, one of 3 to reach an 8-figure exit during 2020. My last company was Fixed. I raised $6.5 million for that company, grew at 300% year over year, hired 80 plus employees. Shit was hard, right? Really, really hard. But got to a great outcome. It created about $500 million of new value for the acquirer, Assurant, Fortune 300. If you have T-Mobile, I'm on your phone right now. We handle over 2 million service transactions annually, 3,000 daily. My team is over there doing amazing things still to this day. After that acquisition, I took about $500 million of my own money, raised a little bit of additional money, and I started my own angel fund. I did about 9 deals, returned roughly 7.3x to my investors on a 38% MOIC. 38% net IRR. And I thought that was really a good foundation for sort of building a strong thematic around the segment that I'm investing in. Both of my exits were enterprise software. First was cybersecurity, second was enterprise SaaS. So, those are segments that I felt very comfortable with, everything from deep tech, infrastructure, all the way up to cybersecurity applications. And so, began to invest in those areas and launched Latimer literally a year ago. We got our first checks in June of last year. We're about halfway through a $50 million fundraise. Great investors that range from governors of very prominent states all the way to institutions, Fortune 10 institutions. And so we're on our path. I think when I look at the segment that we're investing in, just like Himalaya, there's a whole group of underserved, underprivileged entrepreneurs, or privileged, underprivileged, I don't know what you want to call them, right? Black entrepreneurs that are just left out in the cold in terms of both networks and also relationships, capital, all of those things. But what we see is that 1 in 3 of those entrepreneurs are getting to Series A, despite all of those challenges, right? And so I don't know that investing in just black founders or Latinx founders is a strong thematic. I think you've got to have some underlying data set supporting the direction in which you're investing, and what we see is nothing but significant opportunity, especially when you couple that with the fact that 70% of all acquisitions happen through strategics that are we hope to bring to the table with every investment that we make. So we're a target $50 million fund. We write checks between $1 and $4 million. We've made our first 2 investments already. Really excited about those companies, and we're investing in black founders.
Thank you for that. And before we get into thesis and fund structure, I actually want to know, there are different aspects, and even just the folks in this room, there are different aspects of the VC ecosystem. You both have started companies. I'm a lawyer in the space. Why a fund? What in your mind was I actually want to start a fund, and this is why?
Yeah, I'll just say for me, I very easily could have started another company. That would have been a fun journey, but anytime you start a company and you raise capital, I think you've got to be committed to a 10-year journey at a minimum, right? And that would be interesting to me, and I could affect lives and I could affect people, but I could affect more people. The magnitude of what I could do in terms of supporting entrepreneurs and the ways that I support them today. I talk to basically every black entrepreneur on the planet, and when they come to me, I help them with all kinds of things. I think that kind of support is just so much more rewarding than starting another company and solving one singular problem. I feel like I'm able to help them dig in, whether it's sales playbook development, early customer playbooks, hiring, culture, strategy, any of those things across a range of companies that I can support them on. And so I get excited about, sort of the voluminous nature of that versus, sort of a single one-off, another successful startup. And I've had failures too, right?
I mean, +1 to all of that, right? And I think the support piece is really huge. I think that, when I walked into my first angel meeting, this is when I was getting my MBA and I was a representative of that school, I noticed that I was one of very few people of color, but I was the only woman of color. And then when people started speaking about their backgrounds, I started to realize socioeconomically, I'm also very different than most of the people who are in the room. And for me, when I felt that, I felt super different, super alienated. I also saw that as an opportunity of what would happen if there was more representation, both demographically and socioeconomically, in the room making decisions on capital allocation. The other part to that was that when I heard founders pitching, I started to realize that investors see founders in a box, right? And when they make investment decisions, they're always wanting to hear certain words. So when there's capital efficiency or market responsiveness or customer centricity or scalability, right? It's the vocabulary is one of the biggest barriers to black and brown people being able to even get access to the initial funding, let alone all the other parts that come with scaling and supporting a founder and a startup when they go from one stage to inorganic growth to an acquisition, right? And so I think for me, I've always felt like I'm between two worlds, and how can I create bridges to be able to support the widest number of innovators and include many more different lived experiences. And so I think that's why I wanted to do a fund. I will say, because of my background, I never feel like I know enough ever. And so that's actually why I volunteered with angel groups, and then I started working at funds, and why I worked at so many funds is because I always felt like, and I still feel like, I never know enough. There's always more that you can learn. And in doing so, I started to realize there's so many different types of structures, which I'm sure we'll talk about, of venture funds, and there's a gap in the market for demographic investing. When we think about, I was just having a conversation earlier to this, where 2020, at the height of the racial justice movement, everyone wanted to put out diversity statements, and everyone wanted to hire diverse candidates and say like, oh yeah, we're investing in Black founders. But most of those funds don't have that as their core business model. Like, that's not what they built their fund on. And so, as we've seen in 2022 and 2023, when funding gets tight, when there's market volatility, all of those individuals pull back, right? Because they're like, oh, well, like that, well, we don't have money to do that anymore. Because that wasn't the original thing that you wanted to do. You didn't start a fund to be able to expand inclusivity and to be able to create better innovation and better inclusion in the innovation ecosystem. You didn't create a fund to be able to create better representation on the funder side. And so when it's just a sprinkle and a diversity statement, all of those things will eventually get pulled back. And that's why I realized, like, we wanted to start a fund, is we have a full women of color leadership team. That's really important to us, is that we have much more representation on the funder side, and we focus at the core. Our business model is demographic-based investing. That's something we all know how to do. We're a team of blue-collar workers that for decades have been working with Black and brown founders and individuals and small business owners. So we bring all of that to the fund, and that's like at the core. So what we're trying to do is create a model for how do you do demographic-based investing, not like as a metric or something to check off so you can get funding from someone, but like, how do you do it as your core business model, and how do you do it well?
That's great. That's great. And so, given that background, now you're at the stage where, okay, I want to raise a fund. Let's talk about thesis. You guys have touched on your thesis a little bit. Let's talk about thesis. Let's talk about fund size. I know some folks, the theory is, you want to raise enough to sort of prove your thesis. There's questions around that. So for you guys, it was fund size. Did you think about how many LPs that you were going to go after, like your LP base? Like, if you could kind of just talk us through sort of those initial assumptions that you had.
Yeah, no, 100%. And I'm just so excited to be on this stage with Himalaya. She's, rock star completely. But I want to pick up on something you said a second ago about the taxonomy, right? Like all these like buzzwords and language. I think it not only applies to founders, right? Like as a founder, it took me, as I was a JD MBA, top 50 schools, all that stuff, right? And I still like had a hard time like breaking into venture, breaking into, sort of being a founder and finding my lane and developing a tribe. I think the same is true in venture, right? And the same is true, unfortunately, in venture for Black people, who are trying to join, other Black people doing venture. I think we've got to make that path a little easier. We've got to be more open when it comes to sharing real knowledge. I'm very fortunate to have someone like Phil as an advisor. When I first, launched the fund, one of the first people I called was Phil. And I said, hey man, I'm looking to do this. I think I have an idea of how I'm going to go approach this. And he was just so open, and he was just so, supportive and helpful, Phil Bronner, of that approach. And so I think we need more of that, right? Because that doesn't happen enough, right? And I'm the guy, I'm gonna call you out if that's not happening, right? Or I'm just, not gonna, align with you. And so I think that's an important feature that needs to be added to, this world of venture. It's got to be less bro. We need more women. We need more, sort of people at the table who are, providing that level of collaboration and support. So I'll say that in terms of, how to approach, sort of the idea of, the fund formation, building out, some of your assumptions and all these things. Whatever you assume will be wrong, right? It just will be completely wrong. Like if I could do it all over again, I'd go build a micro fund, right, of maybe 5 to 10 million, and then like go prove it out again, and then raise another 50, and then raise another 100, right? Like that's a longer journey, right? And one that I didn't think I needed to do just given my background. But the reality is, with 98.4% of the money in one group's hands, it is a steep hill to climb, right? And so I think challenging your assumptions about those things is really critical. I think getting out in front of like potential LPs as early as possible, just to sort of like bubble up the idea without the pressure of fundraising, right, is going to be critical, because that feedback is what is really going to help you structure the fund in the early days in the right way. And then figuring out for yourself, what is a minimum viable fund? What does that look like for you, right? A lot of people want to go raise 50. I heard somebody on the stage earlier talk about how, in the wake of George Floyd, all these funds got sprouted up just because they could. And like, they don't really have, sort of now, a lot of, momentum, attraction, or whatever. And I think part of that is that, they hadn't considered these other pieces. And so I think it's critical to get out in front of LPs as early as you can, just to get that, sort of early signal.
So anyone who's seen me on a panel knows that I'm very much on education. I think that given my background, I'm always thinking about grassroots level organization. And so I'm going to just give a few different tiers here for those of you who are in the audience thinking about wanting to start a fund. The number one question is, how do I get started with LPs? How do I get to know LPs? So there's a couple different ways. One, you could try to work with a fund. And let me back up and say there's many different types of funds that you can start as your stage 0. You can work at a fund and try and do a spin out fund. You can work at a corporation and try and do a corporate structure, or investing off of the balance sheet. That's an initiative or a project. There's also different other types of funds that you can do, where if you're not a spin out fund, if you're not working with a corporate entity, if you're wanting to strike out on your own, there's a couple different ways to be able to do that. One, if you don't necessarily have the LP connections to be able to fundraise immediately, what you could do is to focus on the deals. A lot of times when you're fundraising a fund one, you are essentially having them bet on you. And if you don't feel like you have the strength of the relationship to be able to have LPs bet on you, then start it by focusing on a deal. So that's actually what I did, was even after I'd worked at a lot of those funds, I didn't have my own track record, right? I had been able to demonstrate that I was able to diversify other people's funds, but not necessarily my own fund. And so what I did was a series of SPVs, which are special purpose vehicles, where I would find deals that were really great. And then instead of focusing on me, focus on that deal. That deal seems really great. Okay, I'll get 3 people together. I'll get 5 people together. I'll get 10 people together. There's also ways, if you're I really don't know any of these individuals, you can start syndicates online through platforms like AngelList, right? And so there's different ways that you can start to shift the focus off of you and focus it more on the deals, to then also start to create a network of people that trust you, that see that you're really good at that deal sourcing. And that's a way that you can start to build a track record to then parlay that into getting LPs to invest in your fund. Usually, most people start out with individual investors as the core base, right? It's people who really trust you, who are going to give you those first checks. It also depends on your fund size, what types of investors you're going to go for. If it's a sub $50 million fund, then it's probably going to be largely individual investors, maybe some entity investors. $50 million is that floor, because most entity investors, this is not all, right? This is just high level. Most entity investors are going to try and invest $5 million, but don't want to be more than 10% of your fund. And so that's why $50 million is usually the floor for institutional investors. And so you can try to raise a $50 million fund and then focus more on institutional investors, but just like for any founders in the room, B2B sales are going to be long. They're going to be very trust-oriented. And so if you have that capacity to be able to build that network of institutional investors, it might be great to be able to go for a larger fund. If you feel like, actually, my network is individuals, or this is where I can cultivate the biggest network of people quickly, then think of doing maybe a smaller fund, right? It depends on the size. There's also pros and cons of doing smaller funds versus larger funds, and happy to get into that as people want.
Yeah, definitely. I just want to make one note. If you guys do go the syndicate route, please consult an attorney. That I can't tell you how many times we've had folks come to us who has set up their entities incorrectly. We've had to unwind things. There have been law. It's just it can get pretty messy. So just consult an attorney as you're setting those up. But you, Himalaya, actually brought up a really good point. And so I think sometimes folks, when they're starting up funds, that people come to us, they're like, hey, Dennis, I want to form a fund. What do I need to do? And I'm like, okay, let's take a step back. I understand that you want to invest in this specific sector of the market, underrepresented founders, but how are you actually going to go after that deal flow? So without, revealing the secret sauce, unless you want to, like when you're thinking about deal flow, what are you necessarily looking for? Like, how are you sourcing deals? Are you working with other folks? Like, kind of, what approach do you take for that?
So I'm going to answer that with going back one step. So when I was in my MBA, I was super excited about this, and I went to one of my professors and I said, I'm going to set up a fund. And he said, Himalaya, let me just question that a little bit. Even if you were to get capital, that's not all that founders need. They also need support to scale up their businesses, and they need some level of expertise. So to answer your question around thesis, right, is what can you provide founders besides capital? Because a lot of times, both founders and individuals outside of running funds think capital is paramount. That is the thing that funds are providing. And that is very little of what we're providing. That's the foot in the door. This is the start of our relationship, is capital. Now the rest of our relationship is so much support. And if you don't have that wealth of experience to be able to provide that support to scale up a company, it becomes really difficult. So to answer your question around thesis and how to think about building up a fund, I think that's actually where to start, is first think about beyond capital, what can you provide entrepreneurs? And that'll give you a way to focus and to figure out okay, what industry vertical or maybe what demographic vertical, right? Ours is demographic-based investing because we have expertise in supporting specific demographics of entrepreneurs, particularly Black and Latinx founders. And so that's how we built the thesis, is we knew that what we had already done for the last 10 years, we built it on that, and then we knew, okay, here are the gaps. Let's work with industry-specific funds from the Series A and beyond.
Yeah, I would say that it's alarming to me, the number of VCs especially that will not eat their own dog food, right? We tell founders all the time to validate their assumptions, to if you're going to go figure out a customer path, a go-to-market strategy, what is the validated learning supporting that direction? Right, one of my entrepreneurs is here, Tina Williams from Side Deploy. She's amazing. When I asked Tina about the various go-to-market approaches that we are pursuing for her cybersecurity application, which is a brilliant solution in and of itself, she has mountains of documentation and conversations that have validated, or invalidated certain directions. And I think VCs need to do the same thing, particularly when it comes to sourcing. And so we develop a variety of sourcing playbooks. For example, our M&A playbooks, right? That are, how we work with corp dev and CVCs, right? Because ultimately you want to build a firm that has longevity and can exist beyond you. The name Latimer is unique and special because of Lewis Latimer and who he was. I want this to live on, as a legacy forever. And only way that can happen without Luke in the middle of it, without Alana in the middle of it, my partner, is that we have these kind of playbooks, right? And so for us, sourcing, is an omni-channel approach. How we thought about sourcing on day one, was different by the time we got to day 50, right? And we documented, each one of those approaches, and they've all now been kind of proven out to some extent, right? But one of the key ways, and I won't go into all the, sort of various ways that we source, right? But two of the key ways that we source is, one, we've got these great corp dev relationships that I've built over the last, 2 decades being an M&A attorney. That provides a source of bi-directional value, where we're showing them incredible companies, and again, when you build that optionality into a company at the Series A phase, you get 3 to 4x more in a multiple. So I'm not doing this just because it's fun and cool. I'm doing it because I'm going to get more from my LPs, right? And so that's number one. And they send us deals all the time. Like, Luke, this is too early for us. Hey, what do you know about this company? What do you know about that company? That gives us signal, a level of understanding of how this company might fit into the broader schematic, company roadmap, product roadmap for that company, for that Fortune 500, right? And so we use that as another beachhead for how we drive sourcing for some of our key relationships, and it's working. Microsoft is, very interested in one of our deals, for example, and interested in leading all of that, right? And then another way, I think it's important for, particularly for Black founders, right? I'm a new face. I'm new to this space, but I'm not a new face. I've been in this market doing things for 22 years, building things, selling things, growing things, et cetera. And I think for us, we've got to do a better job of articulating our values. What do you believe in? What do you care about? That's one of the key questions I ask people all the time. What do you stand for? And you'd be surprised, most people don't have an answer to that question. But I think by delivering your answer to that question, very publicly to founders, to people in the ecosystem, to other VCs, your tribe just finds you, right? I've gotten so many great deals, so many great opportunities, so many great founders that have come to me just because I articulate my values, on LinkedIn, or social media, wherever I might be having a conversation. I did Syracuse's commencement speech last year around this time, and it was a very candid conversation, right? But that candid conversation led to 3 or 4 great entrepreneurs that, their seed rounds were led by like NEA, right? Why are they coming to me, right? They're coming to me because I represent what they care about, what they think about, what they, who they are. And I think we got to do a better job of that. So, 2 of our sourcing models, again, are, articulating our values and also, the bidirectional relationships that we have with these corp devs.
I'll just add to that real quick and say, I think that from a grassroots perspective, there is such a wealth of accelerator building that happens, particularly in the DMV, but then elsewhere as well, that is such a great source of deal flow, because then they get the business fundamentals, they get very specific coaching. And so just to name a few here, right? There's Generator's Black Founder Accelerator, which Precious Drew runs. Phenomenal, right? Here, in DC, I just saw Phoebe and I saw Donna just walk in, right, with Halcyon. Great program there, and we love being able to co-invest and to be able to see what deal flow is coming out of those programs, because we know that there's a rigorous amount of programming that's happening. There's Venture for Them. We actually just did an event at an HBCU at University of Baltimore and in our University of Maryland, and so we were able to pick out programming that's already happening at HBCUs, and so that's really, really important. I don't want to understate the value of the grassroots efforts of that programming. So many Black and brown founders look at venture capital with a really romanticized ideal of what it can be, and I think going through some level of business education and acceleration can really help you understand venture capital is not good for all businesses, and it's actually good for a very small number of businesses. But that doesn't mean that the business lacks validity. It just means that there's other resources. We were just talking about some venture debt, right? And there's many other types of funding. And I think that acceleration point and the accelerator programs give a more realistic view for people to test out their idea, to go into market, to be able to talk with customers, validate their idea, and also test out what their long-term view is. And so that's definitely something that we prioritize in our sourcing.
Yeah, and just to piggyback on that, I think, I was at Upfront Summit's annual event in LA, and Vinod Khosla was on the stage, and it was a sobering moment, right? Because there were probably 4 times as many VCs, in a room like this, and he said something that just quieted the whole room. He was just most VCs add negative value. If you haven't been part of exits, you haven't been a founder, you haven't been a venture-backed founder, you haven't really been in the trenches, get the fuck off boards. And he said it just like that, right? Because the reality is that most VCs add negative value because they're not willing to do the hard work of really rolling up their sleeves, jumping in, trying to figure out okay, well, we've got an enterprise sales playbook, but it's not working. What are the go-to-market gears that we need to shift? How do we need to think differently about our ACV, our LTV to CAC ratios? How do we need to think different about our product roadmaps? Like, these are things that, like, of course you're going to learn them more acutely as a founder, but as a VC, you need to be able to advise your companies as to, like, how to do these things. Because a lot of these, and particularly black founders, right, who might be at a deficit when it comes to the taxonomy, when it comes to, all of the skill and training that you need to be successful. And so I think leaning into, like, new learnings, leaning into, like, the tactical, practical things that you can do as a VC is going to make you a better investor, right? I think that's just, sort of a critical thing.
That's amazing. And so I have I'll start with the first, but we talked a little bit about advisors and, tapping into your network. How do you both utilize your advisors, whether informally or externally, or or professionally? And then, sometimes people hear about, having your own personal executive board. And so I was just curious to know how you both sort of take that approach that.
Okay. Yeah. So we have both formal and informal. So within the fund, we have an LPAC, which is an LP advisory committee. And so that is the board of the fund. And so those are comprised of both individuals and entity investors that have invested in our fund. They help with the governing of the fund. They also help with some level of administrative guidance. All of those individuals have either exited companies, they have raised their own funds, they are managing directors of funds, to the point of having very tactical operational expertise. That really helps us. And so definitely when you're thinking about wanting to start a fund, it's really helpful to find other people who have already started funds, who are maybe in their fund 2 or fund 3, to be able to help. A lot of times, one of our board members is Aziz Galani, and he runs the Mercury Fund, and I really, really appreciate him because, being in fund 4 or fund 5, that offers a totally different level. Anytime I want to do something, he doesn't go yes, no. He says, okay, Himalaya, here are the pros and cons of what you just said. Here's also 5 other ways you can do it, and here are the pros and cons. And from that level of, you can't make that up, right? There's no way to do that besides through experience to be able to talk through the pros and cons. And so, from a founder's perspective also, when you're thinking about seeking out funders, see if they can do that same thing. People who can say binary yes, no, actually we oftentimes don't have the necessary experience, because in entrepreneurship or in venture capital, there is no right or wrong answer. There's what is the right answer in this particular moment, given this certain set of factors that we know. So that would be my advice to both founders and funders, is find people like Aziz who can provide you a wealth of pros and cons and options. And I will say, informally, we also have advisors to be able to support a lot of our companies at the various stages, because not one person will know every single piece of it, right? And so when we think about the seed stage, there's the product market fit, but then we need to go to the go-to-market fit, and that's a totally different type of expertise. And so you need different types of mentors surrounding the company. You need industry-specific mentors. And so that's something that we really try to surround the company with, to be able to give them a whole wealth of knowledge and expertise.
I think that's such a great point, Himalaya, and I think the glue to all of that is culture. Right, it's really my starting place for most conversations, for most things that I do. Is what do you stand for? What's your culture, right? And I think when it comes to your advisors, it's the same thing, right? 2 of the earliest advisors that I, brought onto the team, when I first wanted to do this, was Phil Bronner. I said, Phil, I want to do this. This is how I want to do it. What do you think? He gave me a lot of good feedback and all that. But what's critical is you need advisors who don't suffer from altitude sickness, right? Who can advise you on the high-level portfolio construction questions around, sort of thematically what direction you're going, how many investments you should make, all those really high-level questions. But then I think I text Phil really recently, last week, about whether or not to renew my pitch book, right? Because it's such a little small tactical thing, but that's 25 grand less, that I can make it an investment. Right, I care about that, right? And so, and he didn't respond oh, it's just too small of a question for me. He responded right away with oh, here's some options. Here's how to think about that, right? Marty Nesbitt has been incredible for me, and we share the same values because all the work he's done with Barack Obama and, and other folks in that camp, it's introduced us, to so many other kinds of conversations that we wouldn't have been able to have. And those kinds of investors, I can take a lot of different things to them, and they don't get altitude sickness. So I think defining your culture is central to that first and foremost, to make sure that you've got eye contact with that advisor first and foremost, and then, asking them very open, honest questions without, the feeling of getting reprimanded, right? Because like you want to position like the most difficult questions in front of those advisors so that they can really understand how to help you.
That's awesome. And we have a little bit of time left, so I'm going to try to leave this open for a few questions if anyone in the crowd has any. But one other thing that I feel like often kind of gets lost is the actual internal team. So you guys have both mentioned you have partners. Have you hired anyone? Kind of how did you look at, working with your partners? Sort of, I'd love to hear about that.
Yeah, I'll take that one first. So yeah, it's challenging, right? Because again, like the first thing you've got to do is define culture. And, I think I went through basically, about 1.5, interviews for a partner before I found Alana. She came over from Cultivation Capital. She's a partner in our firm, shares my values, shares our values, gets what we're trying to do, understands enterprise tech investing at a very granular level, understands portfolio construction, all those things. And I think the two other people that I looked at as a partner, they understood some of those things too, but we just didn't, have exactly the same value, sort of alignment, right? And I think, you could ignore those kinds of things, like for sure, and maybe build a thing that is somewhat successful, but I'm not going for somewhat successful. I'm trying to go to the fucking moon, right? And the only way you're gonna get there is to make sure that the rocket ship is built the right way, has like all the right, tooling in it, that you've, sort of figured out like how to use Jupiter's, orbit to get further and closer to the, to wherever you're going. All of those things, have to sort of align. And, I think, when it comes to partner selection, that's critical. So I think starting with from a place of values and culture is first. And I think relying on your existing LPs, even if you've got one LP, that's one more objective, perspective, opinion that can like weigh in on whether or not, this is a good person, bad person, good hire, bad hire, whatever the case is, right? The way we do it internally, and we do it even for interns. We've got 2 great interns, one from Hopkins, one from Howard University. Shout out to Black VC and HBCU VC. But and 2
Howard.
Great, and Howard. But we've got 2 great interns, and we hire them the same way we hire everybody else, the same way we hired, across the 80 people that I hired in my last startup, right? Because my voice is strong, and I know that, right? And Alana's voice is strong. So how do you get out of a state of equipoise? Or how do you prevent her or me from like influencing one or the other? Well, we said, okay, we're only gonna have 4 selections, right? When we meet a person, I meet them, you meet them, and then we talk about it, right? But instead of like, okay, Luke saying, oh, I love this person and here's why, which automatically biases her, we have 4 responses that have to go into, sort of on the table first. Hard yes, soft yes, hard no, soft no, right? And if you're a hard no, like we just move on, right? If it's a hard yes, soft yes, now we're talking about it, right? But now I know where you stand, right? And I think, again, like this is the stuff that VCs just don't do. And like we've got to do more of it, right? Because we do a lot of bro-y stuff, right? We hire a lot of people that, oh, so-and-so knew so-and-so, or he's gonna help me with an LP. But if you do it the right way, it will matter. And I'll give you one last example, right? I needed a chief of staff, right? This is about 1.5 years ago, 2 years ago. I needed this chief of staff, as I was just starting to think about the fund. And so I hired this guy, and and he's amazing. And I hired him because we shared the same values, right? We didn't even, before the job description was about our values first, and then it was about the job. And so out of, 115 or so employees, we whittled it down to like about 10, and then about 5, and then he was like number 1, right? And, I didn't know much about him personally other than like he was a rock star and he was a good hustler. And so here we go, we're getting off the ground last year, this time, in a room with a bunch of investors. And, he said, well, Luke, would it be helpful maybe to like tell my father about this? I'm like, who the hell is your father? I don't know, but like we're not pitching like individual retail investors, for a $50 million fund. Well, his father happened to be the CIO of T. Rowe Price, right? And that $500,000 check, but got us another $2 million, right? And so I think by, again, coming back to your culture and your values first, right? Everything else will work itself out.
I really like the framing on the values. One additional piece I think that I'll say is that oftentimes I think that, especially in the VC ecosystem, we're always chasing that next higher person. Always, right? Like from a founder perspective, we're chasing investors. Investors are chasing funds and fund of funds. And I think sometimes we forget to look around at who else is here doing the work that we're doing. So, and I say that because being in a partnership with someone, whether you're a co-GP or you're working together, chief of staff, principal, whatever, it's a really intimate role when it comes to a fund, and you really need to know that you are aligned. And I think the best way to know that you're aligned is actually to not have that, like, I'm chasing after someone, oftentimes, I find that founders will come to me with a version of themselves, right? When they're putting their best foot forward because they're essentially auditioning, right? And so then I don't get to see the whole complete picture of the founder until much later. And so I think that's actually that's not what you want in a partner, right? You want to be able to see all the different sides of them. Like, how do they how do they process information? Where do they get information from? How do they process disappointment? How do they go through grief? How do they celebrate? All of those things are critically important because I will say from the day to day, it's not always fun. It's actually mostly work and not fun. There's the wins and the highs and the celebrations, but there's also a lot of lows and disappointments. And I think that being able to find someone that can go through that with you, it's like an intimate partnership, right? And so I think the number one way to do that is to start looking around you instead of always trying to look up. Try and figure out who else is doing the same thing that you're doing in that same boat, and try and figure out how can we collaborate together? How can we work together so that we get to know one another? Because I think that when we spend too much time focusing on our idols and our goals of who we want to be, we miss out on who will be the next generation of leaders.
Yeah, definitely. Well, I ask that you all join me in giving Luke and Himalaya a hand. Thank you so much. Apologies we didn't get to any crowd questions, but I'm sure they'll both be around for a little bit longer today, and you guys feel free to ask questions. But I want to thank you all and hope you guys enjoy the rest of the conference.
Thank you.